you listen to that report, you look at what's happening in the market right now. Is there something fundamentally off? Is there a disconnect between the private markets and the public markets?
Well, I would say this. The public market is putting another level of discipline in terms of valuations. And I think it's important to recognize that the IPO market was getting quite what I call bubbly. In a sense, it reminded me back of the dot-com era, when you had companies coming public where there was no known path to profitability, right? Not a path to profitability. Doesn't that, Joe, you'll remember this, sound like eyeballs? Remember back in the dot-com era, we talked about eyeballs, right? If you don't have a path to profitability, you're not much better than talking about eyeballs.
All of these CEOs say we're the next Amazon. And they look at Amazon as this sort of holy grail example of a company who, at the time they went public, there was an argument about whether they'd ever be profitable.
Right, yeah, but they had a clear path to get to profitability. They chose to continue to ratchet up the investment, but you know you could always get profitable.
Why?
So when I look at the WeWork's IPO, if the attempted IPO, if they said, we have this building in Manhattan, right? It's been leased for 5 years. Here's our profitability with this building. That's our path, right? We're going to do that 100 times over. That might have been a different outcome. We never heard that, right? So without a path to profitability, it's an eyeball talk. Right. Not going to work.
Jay Clayton, chairman of the SEC, recently said in an interview we did at Delivering Alpha that the challenge or problem is that now the real reason people are going public is for liquidity. It's not for any other reason. And that effectively means that the public gets to be is holding the bag.
Well,
I mean,
first of all,
was always a component of an IPO, but not necessarily the driving factor.
I would say that's just the wrong way to think, right? Okay. You're trying to build an institution over time, right? When you're running a company, whether it's public or private, you don't worry about the quarter or the year. You're trying to build this institution over a long period of time. So I hear about the timing of the IPO. The company's been private for too long.
They've been private for a decade.
It makes no sense to me.
Nobody gets to participate.
You're trying to build a company to exist for decades, right? When you time your IPO, should not matter. Right? You're there as a CEO, the board of directors, trying to build this company, do the right things, do well short term, but build it over the long term.
But why are the valuations? Is Masa, for example, Masa's son at SoftBank is sort of, creating this perverse system around valuations? Why are the valuations in the private market so different? What happened to the discipline of these private market investors who were supposed to be, frankly, smarter than the public market?
Well, they're going to have to answer for that, right? When we look at WeWork, that to me was the crescendo, and it was in some ways a parody of some of the hubris you see in the Valley with startups, right? When they talk about changing the world, they're trying to lease real estate. At the end of the day, you got to take away the hype, and you have to look at what is going to be the discounted cash flow of this business over a long period of time. Hard stop.
It's ironic that you're mentioning, the reason to go public is liquidity. It's the liquidity and all the free money in the system that is fueling these bubbles in the private market. You have an entity like a SoftBank, you have these entities, in VC markets, and they're getting their money from wherever pension plan, who have money to deploy, and they have to deploy it, and so they're forced to invest in these companies.
Well, I wouldn't say they're forced to. You're forced to do the right thing for your investors.
They would sit on a bunch of money instead.
Yeah, I would do that, right? Instead of doing this. Yes, but I also would caution private company valuations are different than public company, right? There's an old phrase where I say, you name the terms, I'll give you a price. You give me a price, I'll give the terms. So these are negotiated deals. Right. This is not the same thing as buying common stock in the public market.
Is the bell ringing, though, on the IPO market right now? Do you think that this WeWork situation is such a...
When I started in 2003, we're living in the aftermath of the dot-com bubble bursting. How many IPOs we had in 2003? Essentially zero. Okay. Right? So we've raised over $50 billion this year. So let us keep it in context, right? The IPO market, it's alive, it's well, right, and it's functioning, right? Do we have some valuation mismatches? Of course we do. Do we have more than historically? I think so, but it's still a functioning market. So we shouldn't be sounding great alarm bells. But you're going to have to show a path. Post WeWorks, if you don't have a clear path to profitability, you're going to have a hard time coming public. If you're growing, you have a path, or you're profitable, you're going to do fine.
Joe,
no comment, Joe.
No comment?
I would say that I agree with Bob's first comment that if you had a .com in '99, pets.com, anything, you did well. Now you just say, hey, I'm a, you're Peloton. I got software so that you hook me up to the internet, and I'm an internet trader. Anybody who's it's the same.
Well, and Peloton is still trading at 9 or 10 times revenue.
None of these companies are
Revenue,
technology
right?
companies.
So you call that a failure? I don't. A lot of publicity. The pricing is not good. 9 times revenue, 10 times revenue. By any historical measure, that's a very rich valuation.
When should you measure the success of these stocks, by the way? A year out? 6 months out? I mean, this is sort of the existential question about all these things.
Yeah, I think, but I always go back to the biotech, right, where sometimes you have to wait a decade for them to be successful. So it depends on the situation. You have to make sure you present it right to your investors, what the business plan is.